Hello traders and welcome to another video review. Today is Monday, May 29th, 2023. Let's find out what's going on the Forex economic calendar at the beginning of the trading week. What do we see here is actually a lack of the very important data release from the point of view of the importance, of course. The other one, the yellow dots, which means medium important data, are from Vietnam and from Brazil. And if we place only the low importance data, there is plenty of data from around the globe, but they don't have actual influence on the Forex market. So no big data today. We are approaching the end of the month of the May, so maybe this time we'll not speak about any economic data. Let's switch straight on to the charts, and we are going to start with the majors review. For the beginning of our session, we'll start from the euro dollar. As you can see, for our chart of the euro dollar is showing us that this pair is moving lower and lower. Right now the low is 1.0702, but the downtrend remains intact. The market is trading roughly around the 50 periods moving average and then way below the 100 periods moving average as well. Let's find out where is the next target for the bears. If we consider this low and of course this high, okay, so then that movement here is way below the 61% retracement. I can show it to you right now. If we take the Fibonacci retracement tool and we place it from the other way around and we place it here, so that's the high and that's the low. You can easily see that 61% was here, yeah, at this level 1.0739, and this level is violated by 30 pips. So we went lower than 61%. Very important Fibonacci retracement. Where is the next target? It looks like the next target might be seen somewhere here, 1.0714, but this level had been violated as well. So maybe some lower levels. We should find out some lower levels. 1.0690 is a good one for the temporary support for the euro dollar. Nevertheless, the main target right now is 1.0517. Why? Because it looks like from these levels here towards this level here, there is almost nothing here in terms of the support. Okay, we are below 100 periods moving average, roughly below 50 periods moving average. We broke below 61% of the Fibonacci retracement, and right now the momentum is still negative, is still weak. There is no indication of the euro dollar to start any sort of a bounce any higher. So what we see here at 1.0761 is the key short-term technical resistance that needs to be violated in order for the euro dollar to move higher. Okay, without breakout above this level, movement higher is not possible. So as long as we trade below this level, outlook remains bearish, despite the fact that the momentum hits twice extremely oversold market conditions. So that's the euro dollar for today. Let's find out what's going on the British pound. The situation with the British pound is quite similar to the euro dollar because this market is moving lower and lower. Recently we broke below 1.2352, and now we are right now during this movement to the downside approaching the next target, next technical support, located at 1.2275. so this is the technical support, quite important one. Okay, that might be tested soon. Typical momentum for the down market, for the market which is trending to the downside. As you can see, bulls have a problem to break above the level of 50s. There is clear indication that there is a bearish pressure on a 4-hour chart on the British pound to American dollar. No doubt about it. The next target is done. However, let's take a look what should be done in order to, let's say, reverse this situation for a minute. This is the very important technical resistance, 1.2390, and to be honest, I can place the another one at 1.2468, and very close to this one at 1.2483. The market is trading below 100 and around below the 50 periods moving average. Momentum is negative, no indication of the rally to the upside. The outlook for the British pound to American dollar remains bearish. The other market we are going to take a look at is US dollar to Japanese yen. Beautiful movement, roughly bouncing from the 50 periods moving average on the 4-hour chart, is right now describing this market. So the recent high was made at 140.93. The local technical intraday technical support is located roughly around 140.24, so not that far away, and the other technical support is located at 1.3951. Please notice the fact that there is a clear bearish divergence between the price, which made the high here, and then of course the market went even higher, so the market is trending higher. Nevertheless, the momentum, as you can see, is not that keen to move higher, because there is, you can see, momentum is lower. We hit the extremely overbought market conditions twice. The first time during the high at 138.74, and the second time just when we made the recent swing high. So please notice the fact that we might do some sort of the nice corrective movement to the downside. Let me find out what was the biggest movement to the downside during this up move. Let's say we will take the price range and we do, let's say, this one. Okay, so we got that one and that one. This is minus 0.93%, almost 1% was the correction during this up move here. So there's one more we can take a look at. There's this one as well. However, okay, there's no lower low. 1.27 is the other one. So any movement below 1.27 would indicate we have the price and time overbalance, and the market is ready for a deeper correction, where, for example, around this level here, 137.78, which is the current technical support for the bulls. Let's now find out what's going on the US dollar to the Canadian dollar. This market has almost hit the last important technical resistance, which is located at 1.3666. So this is the technical resistance, a very important one. The local high was made apparently roughly at the level of 1.3653. So it's about 13 pips lower than the high from, I guess this is the end of the April 2023. We got the technical support, intraday technical support, located at 1.35.66. so this is the technical support which should be considered important, and the other technical support is located just at the level of, let's say, we got the very nice technical support at 1.3534. All right, this movement here, of course, to the upside looks exhausted. We hit the extremely overbought conditions. Now we are approaching the level of 50 during this movement to the downside, so please pay attention to this technical support, 1.3566. We should bounce and continue the movement to the upside when the pullback is completed. The outlook for the US dollar to the Canadian dollar remains bullish. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.